Thank you for attending another pre-market post scan. Today is Monday, August 28th, 2017. I hope everyone had a wonderful weekend. I did, as we went out of town celebrating my baby girl's birthday. She turned 9, and I'm very proud of her. She's made a lot of strides. For those of you that don't know, my youngest is autistic, and her first several years of life, she was nonverbal, and now she's extremely verbal and growing in leaps and bounds every day. So this weekend was very special for my household. I do apologize that the last video that I did had absolutely no volume. I had no idea that the mic was muted the whole time. But basically the gist of what I wanted to talk about, I had to type it in there for you. I pinned it under the comments so you could see it. But here it is right here in broad daylight. It happened right after I posted the video. Here is the intraday 4-hour chart of silver futures. Look at this parabolic bar. Did not the algo robots kick in and run stops all the way down? Then the market instantly comes right back up. I warned of impending volatility that would just happen just out of nowhere for whatever reason. The algos were picking up something nefarious was on the way. I knew also that at these lofty levels that the gold and silver will become, candidates for the central banks to come in and try to smash them down again. And here we are. This is a 5-minute bar. So like I said, this was an instantaneous situation. All right. It happened around, let's see, this is the 9:40 a.m. All right. 9:40 a.m. Friday, August 25th, 2017. Here we are. Market drops from 1712 all the way down to 1671. This is a 5-minute bar. Boom. Then the market comes back down again, and then quickly recovers. So if we look here, we have volume of 15,507, right? Here we go, right here. So out of nowhere, just an enormous amount of orders came into this thinly traded market in comparison. Look at the little bit of orders that are coming in on the 5-minute chart. All right, this is all your pre-market early in the morning. And then right here at 8:25 a.m., volume starts picking up. We went from 407 contracts, 740 contracts, dropped back down again, 328, 440, bam, 6,617 orders come in, contracts, on the 9:15 a.m. bar, 5-minute bar. All right, 9:15 a.m. out of nowhere, we basically get into a fast market. Here you are, 6,617 orders from 248. So the market jumped. Just break this down. All right, so at 9:05 a.m., we get 248 contracts. And then 5 minutes later, we jump to 440. All right, so again, here we are, 248, 440. All right, almost double the contracts within 5 minutes. We went from 440 contracts at 9:10 a.m. to 6,617 contracts at 9:15 a.m. Then we have these 1, 2, 3, 4 inside bars right here. So from 9:20 to 9:35 a.m., we got inside bars, right? Look at the contract, 1,700, 800, 1,100, 989. And then all of a sudden on this one right here, we get 15,507. Where did that come from? At 9:40 a.m. Then the next bar, 3,000. It dropped after that. 2,000. 1,700. And then right here, 7,000. So here we had 15,000. Here we got 7,000 on the way back up. 2,000. 1,400. 1,400. 1,600. 1,100. 1,000. Kind of averaging out here. But you get the idea. This bar is 15,000. This bar is 7,000. So, as we can see, programs kicked in at 9:40 at this price right here. Smashed the market down, brought it right back up again, brought it back up to $16,095. I'm sorry, $16.95. Then from $16.95, it drops back down to $16.78 and then quickly reverses again. And then by 11 o'clock, the entire bar here has been erased. So we went from 9:40 to 11 a.m. All right? So an hour and 20 minutes later, all this was erased. And this was a spike bar. This happened on a spike bar. All right? Now let's pull in the 1 hour chart real quick. Volatility out of nowhere. Here we go. This is the 1 hour. So we went from here to here. Now, on the 1 hour chart, you got a total of 35,718 orders that go in. The next bar is only 20,000. Then 8, and so on and so forth. Break it down in the 4 hour window. Peep game, folks. Peep game. This is what they do. This is how they do it. All right, so this is how the market really looked. All right? This is how things really looked when you break it down. Everything was quiet, as you can see. Just trending down, just quiet. Quiet, quiet, quiet. All right, 24,000 contracts, 13,000 contracts, 6,000 contracts. You went from 24,000 right here on this one to only 6,700. Then the next bar is 20,000 contracts. Then here's 10, and so on and so forth. So basically what I'm showing you right now, if you guys are getting the gist of this right here had 24,000 contracts on this bar here. And this is at 9 a.m. But this bar, all right, 5 p.m., as you can see here, what do you see? You see 20,000 contracts. This one, 24. This one had less contracts, all right, less contracts, and we get this type of a parabolic move. You see that? Now, the date on this, if you look to the right-hand side of my screen, is July the 6th of 2017. All right, this is the first instance of this type of a move. Now, why is that the case? Why did this handle 24,000, this handled 4,000 less, and you had this kind of a move? Something is not right at the exchange level. They need to go back and they need to deal with that. All right. So this is there. You can see it. Now let's go back to the 25th right here. And let's analyze this one. All right. Again, we're looking at silver futures. All right. This bar is Friday at 9 a.m. bar. 67,902. This bar here was only 9,000. The bar previous to that. This bar here previous to that is only 6,900. The bar after this one is only 84. Look at this, 67,000 contracts. To put this in perspective, the algorithms came in with just enough volume to smash the market down, sell it short, and then use the majority of the volume to come in through the back door and bid it back up. It was a way to push the market around so they could buy it on the cheap and put it back up. So they actually got long down here up in the tail, not from up here. They got long from down here. They come in with the order to push it down with the shorts. They're willing to lose a little bit on that because of the volatility so that they could get long here and get out. So they're hoping to make money when they push it down and then make twice, 3, 4, 5, 10 times as much when they bring it back up again. All right, so they spoofed the market down here and then brought it back up. All right, look at the volumes. It tells the story. 16,000 on this one, 34,000 on this one. The bar before that was only 17,000. See how this works. All right, that is how they like to do things, ladies and gentlemen. That's it. That's how they come in and they control the gold and the silver markets, okay? It doesn't take much for them to push things around, but that is how they bully it. That's what the central banks do. They like to bully the markets, all right? They use their cohorts to come in, and those are the things that they do. That's how they roll with it, okay? Now, looking from the weekly perspective, all right, when we closed out the week of, August the 18th, we had under the momentum price trigger, we had showing you that it was red, which let you know and to believe that they were going to run some stops. That was just going to happen. All right, and then that was followed up because by the time we finished the August 25th bar, we had run those stops. The market had got mad low, and that's what it showed you. So then, from day to day, it kept showing you. I even had someone ask me, why is it red? Why do we have red here under the intraday price inflection point, price triggers? And as I said, because there's something going on here. There's something that's brewing, and sure enough, it was. All right, and that's what we got. We saw that something was brewing in here to make that happen. So we ended up with a rally alert by the time we finished the August the 18th, and then by the time we finished last week, we ended with another rally alert going forward. And then by the time we finished, now here we are setting at another rally alert. It's quite interesting the way things work and how things pan out. It just is what it is, and there's no way to go otherwise with it. So here we are. You now see what's what in these markets. Like I said, you can't make this stuff up, people. It just is what it is. And as you can see right now, the overnight sessions are up and running, and the markets are off to the races. So I just wanted to show you what happened with the silver right after I put out the video warning of impending crazy volatility. And it did come, and it came out of nowhere. Not like I expected it, though. I anticipated it to be a little bit more wild than what we got, but that was definitely wild enough. All right, let's look at these overnights. Okay, so the Dow is up 27 at 21,836. NASDAQ 100 is up 11.5 at 5836.5. E-mini S&P 500 is up 4.25 at 2446.75. Russell up 3.1 at 1378.70. Nat gas down even more now at $2.87. Gold right now is at $5.80 at 1303.80 after hitting 1305 so far in the overnight. Silver is up 17 cents at $17.22.5 after hitting 17.25. Oil down 40 cents at 47.45. The strong bond is down 8/32 at 155.01. And your beans are up $1.50 at 9.46. The euro finally got its act together, powered up some more. It's up 52 pips at 119.44 after hitting 119.73. Pound sterling is up 43 pips at 129.30. And your Aussie is up 12 pips at 79.47. And the dollar pulled back heavy, down 29 right now at 92.45. So we're now deep into the 92 handle. All right, we still got 2 points and 44 pips to go, or 244 pips to go. All right, before we reach that support threshold for the dollar, which is around 90. All right, so that's your overnight. Let's take a look at any triggers that we might have here. And let's see here. I just thought about something, so bear with me here for a minute. I need to do this right quick. Let's see what we got. Okay, so let's take a look now at our alerts for the week. Let's see what we got here. All right, so notables. Let's look at rallies first, and then we'll go to crash alerts. All right, notables on the rally side. We got the oil space, OIH and USO. And let's see here. We got Starbucks. We got regional banking, ticker KRE. Consumer discretionaries, XLY. We got silver, of course, and it's already well on its way. As a matter of fact, price inflection points are definitely triggered on the silver. Let's see, financial sector, XLF. Healthcare sector, XLV. We got natural gas. We got the Russell with the rally alert. But again, nothing nowhere near triggering. So this is one to watch. I'm watching reversals on that one, but we'll come back to it. Let's see, JP Morgan, the yen has a rally alert on it. Let's see, IBM, Goldman Sachs. Let's see, XLE, the energy sector. And that's probably, I think the algorithms are probably picking up because of the hurricane, possibly too, on that one. All right, we got a rally alert in XIV. This is going to be interesting to watch as well. And let's see, Bank of America, AutoZone. All right, let's see what else we got. Okay, that's about it on the notables for rally alerts. But now for the oversold alerts, we got a couple. We got the SPY and the SPX, so the cash index and the ETF. S&P Spider have rally alerts on it, so that's interesting. The QQQ, let's see, the Euro Yen, E-mini S&P 500, dry ships, and the British Pound all have oversold alerts on them, so we expect to see those instruments rally as well. All right, now let's take a look at crash alerts to see where we are here. All right, don't have that many crash alerts that are notable. It's the Cobalt is still broken. It has both rally and crash alerts on it. NVIDIA has a crash alert on it. GLD has a crash alert, which is very interesting. Very, very interesting. Let's see what else we got. The silver spot is showing a crash alert. So this is interesting as well because silver futures are showing themselves as broken. It has both rally and crash alerts on it. And by the way, folks, this is based off the weekly. All right, let's see here. What else we got? We got Global Arena Holdings, GAHC, penny stock, has a crash alert on it. Let's see. Broadridge Financial Solutions has a crash alert on it. Let's see. Apple and Advisories Ranger Equity Bear. That one has a crash alert on it as well. Ticker symbol HDGE. All right, so HDGE is still not in play yet. Definitely one I've been watching because it was showing signs of possibly getting ready to break out, and then we got this pullback. The thing about HDGE is the perfect stock could get long when the stock market is correcting. And right now, we do show that the momentum is still locked in on the bull side, but the trend is still locked in on the bear side. So we could be bottoming out. So we're going to be watching HDGE very closely today. Looking to buy some of this pullback. We'll have to wait and see, but I'm watching it. All right, what else we got? AG has a crash alert as well. All right, so, and that's First Majestic Silver, for those that don't know. All right, so those are the notables that we're going to be watching to start the week off. That's what we got. So this is going to be very interesting to see how this goes. I'm still going to put out the volatility alert. Keep your eyes and ears open still. Not just because of the hurricane, but just because of all of the uncertainty, all of the news that's swirling around. There's so much going on right now. And just keep your eyes and ears open. We love volatility. I mean, that's how you eat. You don't make money in the markets if there's no volatility. If prices don't move, you make no money. Unless you're going to employ other techniques that make money when markets are stagnant and do nothing. But then again, those that know me, I don't really care too much for those strategies. All right, so anyway, that's all we got for now. As far as we're going to take a look at the pulse waves, see what they got for us today. Let's see. There's a lot of news regarding the blockchain. Let's see here. The SEC moves to halt over-the-counter trading for a Bitcoin firm. Let's see. ATM chain card giant China UnionPay files new blockchain patent. Okay. Litecoin prices surge to new all-time highs over 60 bucks. Let's see here. Let's see what else we got. That's about it for right now. There's some other things that are happening, but I'll have to probably make a separate video for that. There's nothing really big like, oh, you must know I got to deal with or talk about right now. So with that being said, it's all good. Remember, pulsewavetrading.com. Come learn how to trade these markets, navigate these incredible algorithms. Right now, everything is controlled by algorithms and soon to be controlled by blockchain. So you definitely need to have an edge, all right, so you don't get your face ripped off. That's what pulsewavetrading.com is for. Come and take the study course. Come and challenge yourself to learn what the central banks don't want you to know. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Peace.